Social Currency, powered by Sunrise Banks, is a podcast that introduces you to some of the most innovative change makers in finance, technology, and all things social impact. We walk through how they're opening doors, reimagining industries with a focus on community, conservation, and accessibility. I'm your host, Tyler Seidel.
And I'm Eric Schur. From social entrepreneurs to compliance innovators and payments pioneers, we share the stories behind a growing movement working toward a world where opportunity is within everyone's reach.
I'm Tyler Seidel.
And I'm Eric Schur. Today, we'll talk about the future of community banking, covering the near-term, midterm, and maybe even long-range trends around product-led growth, using AI to scale, and expanding entrepreneurship.
Our guest today is going to be Madeline Fredin. She is the Vice President of Partnership Strategy at the one, the only, the Alloy Labs, working with banks on partnership opportunities and emerging trends. Prior to this gig, which very much is a dream job for so many, she worked at Crow and she was educated at Wheaton College. Madeline, thank you for joining us today. As the first question out of the gate, what pulled you into the space initially? Was it intentional or did you just fall in?
I've never told this story publicly, but it was absolutely an accident. I was applying for a consulting position, and it was only in my final interview when I was asked, why banking, that I realized I was applying for a banking-specific consulting position. I then came to love the space and have stayed in it for the last decade. But to be truly honest, it was an accident to begin with. But I got put on a product team right away, and I was working on a team that was automating the spreading for floor plan lenders. So these were early days. We had classic OCR. It was good for like 60% quality, but then we had all the mechanical Turks behind the scenes, fixing everything, living up to the promises of automation. But even then, I know we're going to talk AI, but I remember having conversations with credit managers, and I was a young BA, and I was passionate about the product that we were building and automating this highly manual work. But I had credit managers telling me, can you not spread a handful every month? Because we've got new credit analysts, and this is an excellent training activity. I want them to have the experience of manually spreading this GM financial statement into our format. And I remember just being miffed of like, why? Like, that's going to take forever. Who would want to do that by hand? And it's so funny how these themes have continued to play out. But anyway, I loved my time on that team, learned a ton about products, about banking, and through that did a deep kind of detour into design thinking, business strategy, and kind of found my way more into strategic planning practices, got connected with Alloy Labs. Even while I was at Crow, we're good partners still with Crow. And so once I learned about Alloy Labs and the banks and what they were doing in this group of like, these are all the innovative banks. I mean, shout out to Sunrise Banks as well as premier members. Thank you so much. But they're all collaborating on figuring out, it's like this next era of community banking requires new ways of managing, new types of products. And there's not really a blueprint for this the way that there historically has been. Like these are the banks that I want to be working with. I had so much respect for all the Alloy Labs members that it was just a couple years ago, made the leap. And now I'm here working alongside our alliance of community banks, trying to do just that, of charting the future of community bank without losing the heart of it. So that's me. That's my journey to where we are today.
Well, I appreciate that. When you say charting the journey without losing the heart of it, I think that you captured the sentiment very much in a sense that we're coming to lift up an industry, not to change it or revisit, as much as we're there to support and reach new heights. During your time at Crow and knowing you were having interaction with Alloy Labs, what did you start to see inside of banks that led you to maybe join Alloy Labs so you could make that difference?
Yeah, the biggest was the eroding of traditional competitive moats. I think historically is like we have a large country, we have broad reaching geographies, and when banking had to be done in person, it made sense to have a branch and a bank in every community to serve their needs. And with everything moving digitally, there has been this I think erosion of that protection, saying actually I don't need to bank locally. And so there's been this rethinking of, okay, if not geography, then what? What is going to be the thing that sets me apart? I am a student of Roger Martin. I think his playing to win framework is simple and elegant for figuring out how do I actually pursue differentiation. And there's two key choices around where do I play, which is essentially, what customers am I uniquely positioned to serve and meet their needs? And then the how to win choice of what is my competitive advantage that I can serve those customers better than anybody else. And so I was seeing this gravitation toward business strategy in community banking in a way where historically, I think banking was the business model. Banking, it was almost operated like a franchise where if you're opening, a crumble cookie, for example, they're going to hand you the operating playbook and say, congratulations, you're now, operating this crumble cookie. This is how you do it. And I think a lot of community banking was like that of I'm going to cut and paste the franchise playbook of community banking. And that has gone away. And so now we have this rationalization of, okay, if I can't do that, then who am I going to serve and how am I going to serve them? And that, entrance of business strategy into the banking space just excited me so much. So yeah, that was the draw for me.
Madeline, you talk. We'll get to that question of innovation a little bit later, and tossing aside the franchise model of community banking, but getting back to how do I differentiate myself? At first glance, it appears that products and services in banking are pretty well established. Even the latest fintech with a great customer experience, it just is looking for a bank to basically take a deposit or make a loan. So, how would you describe product-led growth and innovation, and talk about why this matters, particularly today?
Mm. Oh, speaking my love language, yes. So when I ask a traditional community bank, like, what are your products? Oftentimes I start getting a list as like, well, we have checking accounts, we have CDs, we have savings accounts. And what I'm getting actually is a list of commodities. Of like, these accounts exist at every single bank. And I think that in order to start to lean into that differentiation, there has to be a distinction between what is the account versus what is the product. And so when I think about product, I actually think about it through the lens of, okay, if you're familiar with Clayton Christensen, he had his jobs to be done theory around, okay, customers actually don't buy products, they hire products to help them get a job done. He did that phenomenal research. It's very famous with McDonald's around, what jobs are these early morning drive-through customers hiring milkshakes to do for them. It's like, oh, well, it fills them up and it gives them something to do during their commute. And it was great research, but I love that reframe around, okay, what is the job to be done? And so when you look at traditional bank accounts, it is very much framed through the lens of the functional capability that the bank offers. And products are not like that. Products are framed through the lens of what value is this delivering to the customer? And we actually just recently in our strategy and business model COE had a debate between like, how much is marketing versus how much is product innovation? And truthfully, it's a blurry line. But ideally, there is, if you really want sticky relationships with your customers, it does need to be more than marketing. It does need to be, we're not just going to flip the script and it's like, well, it's actually not positive pay. It's preventing fraud. It's like, but under the hood, it's still positive pay. It's like, well, if we think about that's a marketing rebrand. If we want to think about like product-led growth, it's like, oh, we have elderly customers that their emotional job to be done is to feel that their life savings are secure. And they have functional jobs to be done around identifying and avoiding scams. Interesting. What else could we offer them besides just traditional, oh, yes, we have FDIC insurance and we have checking and savings accounts. What else could we build into this that would help them get those jobs done we invested in a company called Careful. And so they are a platform that's helping kind of prevent elder fraud and elder abuse by managing or monitoring those transactions and giving them alerts and giving them the opportunity to pull in their caregivers and children to help them do that work of monitoring their finances together. And I love this example because it touches on what we call our edge of money investment thesis. So at Alloy Labs, we run not only the Alliance, but we also run a venture capital fund. And one of the ways that we invest is around this theory that, most community banks see themselves as, being in the center of money. We've got accounts, but that so much of the value actually happens on the edge of money. It's not just a mortgage. It's a transition. It's new. It's a move. It's new schools. It's new friends and community. And it's like, oh, wow, there's so much work to be done. How might we as a bank position ourselves not just to solve the center of money and that financial job to be done, but all of those jobs around it? And Careful does a really good job with that as well, of like being in that edge of money. So this is a very long-winded answer to your question of product-led growth, but that would be my answer, is to pursue product first. Like, back to your where to play, who are the customers that we're focused on? What jobs do they have to be done that we can go after and help them get done better than anybody else? And then building in product that actually extends past those core bank commodities to be able to actually capture value. That's a piece that I think banks are hesitant because fees have such a bad rap, because historically they've been punitive instead of value additive. And so it's like every fintech out there, the fintechs are not afraid to do this, to charge for the value that they are creating. And I think banks have been hesitant to really do that, or haven't been able to be successful. But that's what I would say in terms of my vision for product-led growth.
No, that's fantastic. And Madeline, I'm sure that there are some folks listening who either have been assigned the innovator role or have innovation as part of their job description. And what you just described probably got people excited, but maybe at the same time that they're saying to themselves, this is a very different way of thinking. My colleagues don't think this way. So in your work with community banks and other community-based financials, as part of this product-led strategy, how do you, like, what are some of the common hurdles that you've experienced, and maybe some of the ways, maybe a couple of tips and tricks you could provide to help individual contributors who are kind of at the tip of the spear of innovation in their organization to be able to start having this conversation and opening up that way of thinking?
Mm. The biggest pushback that I get is, we're a community bank, therefore we are for everyone. And that there is this resistance to anything that's perceived as exclusive because, again, there are regulations. And I'm not saying that to have a strategy that focuses on a segment means that you have to deny service to anybody else. It's like, absolutely not. That's not a good way to do business in any way. Like Trader Joe's, they've got small aisles, terrible parking. They're great if you're single or retired and you want that experience. They're not great if you've got 3 kids and a shopping cart and a minivan to park. So it's not like they're keeping large families out, but they are catering to a specific segment that really loves shopping there. And banks can do that as well. And I call this opinionated banking, of like, we have an opinion about which customers that we can serve and how we want to serve them. So that mindset of, yes, our doors are open to everyone. However, we are going to focus on a particular subset of customers to create value for. And we don't need to justify every piece of product innovation as being desirable by everybody or our loudest, most frequent branch-based customer. Because I think that also tends to be the filter by which things is like, but Mary comes in the branch every day and she would be so mad if we offered or didn't offer that. I was like, I feel for Mary. However, that might not be your best prioritization strategy. So that, like, opinionated banking as a mindset shift, I would say, is foundational. Besides that, once you get to the point of identifying, okay, who then are we going to focus on? Letting your customers' needs be your roadmap. I lead strategic planning for a lot of community banks, and inevitably, that strategic plan is dictated by let's copy whatever our nearest competitors are doing, which, if your pursuit is differentiation, is a very poor decision. Or it is heavily performance based of, okay, we just need to cut costs, we need to make sure that we are considering the technologies du jour that we're hearing about at all these conferences, and that we can go to our board and say, we're doing something about this. We've nodded at stable coins, and we're doing the AI, and we've sprinkled in a blockchain, and it's fine. And there's no customer in that. And it's so, I would say, opinionated banking, and then letting that customer dictate your roadmap are two essential foundations for how you do this. There are lots of, I would say, cultural and organizational challenges that come on that. We host a product management workshop for our banks in Chicago every summer. And we gave some examples of like, what's an example of a good product versus a bad product. And on that bad product list, I've already listed them. Checking account. Not a great, in terms of our definition of like these, opinionated products, not a great example. But the like, oh, are you the new in town mortgage of that includes opportunities to connect or shop at local businesses or whatever that might be. And I think often it gets put in this category of like, oh, it's a bundled product. There's other stuff in there. And I had one banker raise her hand and she's like, that sounds great, but you just described 6 different departments that all have separate incentives. And for us to offer that product would destroy our org chart. It's like, fascinating. Okay. So I think those are some of the like things of like, okay, starting with vision, strategic choice around who, and then you're like, if we really are going to let our customer be our roadmap, organizationally, how do we need to reorganize in order to actually execute on that vision? And that's hard. I will acknowledge that. I'm seeing banks do it well, but it is hard.
So you're kind of talking through a little things that the banks struggle with in terms of strategic planning, that road mapping, that 1 to 3, if not even the 3 to 5. And I think what you're touching on is absolutely accurate. You have a lot of maybe community banks that may not have the ability to hire somebody that's really solely focused on strategy, product strategy, or any of the kind of sub process fulfillment that goes along therewith. And you touched on something I think that's very deep, very profound. And I found myself actually just taking a lot of notes around your customer centric journey. I would, and that's not necessarily a new idea. That idea is almost as old as time. It parallels maybe Facebook versus Instagram and how Instagram was capturing market share because it took less clicks to post a picture. What are some things that you think community banks or traditional banks are still struggling with in relation to innovation or that strategic process mapping? You touched on a few. Is there anything in terms of depth or that you feel is really being missed right now?
Hmm. For as much as community banks are in there, they're in their communities. I think that there is a lack of real insight being captured around what their customers need and want. And part of that is structural, of we've had a decade of proliferation of systems within the bank that don't talk to each other. And so trying to actually understand your customer and their relationship to you as a financial institution is extremely difficult if you haven't invested in any kind of foundational or unified layer of data across all of those systems to be able to get a picture of who is this customer, how do they engage with us, also to be able to mine their transaction data. there's so much there's so much value in that data, and I think so many community banks have been late to the party in acknowledging the wealth that they have in their data, and to let alone you know see it, but to then take that and leverage it into not just offers but product roadmap of what do we know, to be true about our customers. So I would say that most are flying blind in terms of who should we prioritize and what value. And you mentioned it of like hiring in like product talent is difficult because there are specific methodologies that serve a product led organization well that are not native to community banking. And a lot of that is primary customer research of having customer interviews that don't go like, what would you like us to offer you? And I I do some training. We created a master class for members on customer interviewing, and um, we to do that we try to get a sense for it's like how are you guys doing this today, and it's a lot of focus groups and it's a lot of asking is like okay, so what would you like from us, but it's like that is the work of the bank to be able to get the data, and it's your job to synthesize that into the insight of oh I see that my customers, I have a quarter of my customers that have Robinhood accounts. Why? I was like, oh, interesting, because my wealth threshold is $100,000 and I have a bunch of 20, 30-year-olds. I hope that's the case at your community bank. That, just don't even hit that threshold, but they still want investment products. Oh, interesting. Do we need we're missing out on those deposits and potentially some, non-interest income by letting them take that elsewhere. It's like, oh, maybe we need a digital investment product. And maybe that could be our path to creating more value for millennials. It's like, oh, fascinating. Anyway, so those are that would be my that would be my wish list for community banks. It's like, let's get some unified data. Let's learn how to interpret that data into product strategy.
One thing that I can say is you're a very illustrative speaker, and you do a fantastic job of driving home points, providing examples, providing real time clarity. It's fantastic in terms of insight as well as actionable information. So I just wanted to position that with you because how articulate you are. If you folks have not had any interaction with Madeline, seek her out. She's obviously mentioned a couple master classes, things that they host in relation to product. I myself am getting interested. I'm getting excited. I'm about ready to reach out to Jackie and have her schedule some time with you just to unpack what's living but in that mind of yours. It's brilliant. It's very much bright. The one thing that you mentioned is that we is a very broad pronoun, but people in the industry, we're not capturing true needs and true wants. We're maybe listening to the Marys that are maybe voicing their opinion. We might be relying on and net promoter scores a little too heavily. And so I think that that's all well stated. When you're talking about collaboration over competition and Alloy Labs, how does Alloy Labs help make the banking model work? How do you folks jump in and help drive this forward? Can you maybe just kind of color in how you folks can help take people to the next level in terms of innovation, insight, and what a personal product path could be for them?
Yeah. I would say the difficulty for most community bank leaders is not necessarily the getting to the decision of like, I should probably, partner with a fintech to offer a new product. It's like, that seems like a good strategy. It is all in the execution. We have a model of an excellence model around their strategic excellence, operational excellence, or strategic executional excellence and operational excellence. And I think a lot of community bank leaders are really good at strategic excellence and operational excellence, which is like making the decisions and then, squeezing every bit out of, operationalizing that system. But that path of transformation of getting from making the decision to the point where it is implemented, optimized, and then scaled is very difficult. And there's actually not a lot of, I would say, trade secrets in that part of the journey. And it is an excellent opportunity to collaborate with other leaders who have done it before and led their banks through this type of transformation. So a lot of the conversations are there. I would say the other piece of this is separating signal from noise. Um, that is one thing that I think our members trust us to do as well, not only because of the purview that we as a team have into banks, but also we have our ventures team that is doing that in the market. And so we are synthesizing the insights across the community bank. It's like, this is what we are hearing of like, oh, we've been talking at Alloy Labs about deposits are not going to be cheap forever since 2018. And our members have been pursuing deposit gathering strategies way before it was so hip and popular. So I feel a sense of pride around that. And the other piece of that is like we've been curating partners in the market to be able to help banks do that because it's so noisy. We were just at FinTech Meetup this week, and it is the number of AI startups is just overwhelming. And to have to choose and walk through like, how do I pick the winners? How do I know who's going to have staying power? Doing that in community or having your own dedicated ventures team who's going to help you see that, whose job it is to be able to make those types of bets is a real value add. So I would say those are probably the two biggest, values that community bankers get out of participating in Alloy Labs. And honestly, we just have a lot of fun too. Eric knows he's been in our Nashville annual member meeting every year, and we have a good time.
Absolutely. Madeline, I'm so happy you brought up artificial intelligence and FinTech Meetup because no conversation around innovation is complete without it, at least this year. Yeah, I'd like to say we're fresh, but maybe we're still a little jet lagged off of FinTech Meetup. But in either case, I know when we talk about artificial intelligence, I think you and I were actually in a brief conversation during the conference where we had a banker talk about artificial intelligence, and he was talking about the fact that he knew he had to make an investment, and he also knew he was going to be wrong.
Mm-hmm.
And so while he's making the investment, he's also preparing his organization to fail quickly and learn to pivot without blame. I'm curious, coming out of that conference, as you mentioned, AI was spoken. We saw many bankers that are just all over the roadmap in their journey. Some are still in discovery, some are still learning how to spell it. Some are really diving into this agency, the agent economy, the tools and productivity that AI promises. I guess I'll take any insights or any comment that may have stuck with you, at least at this early stage coming out of that conference around artificial intelligence. And then I want to dive into just a couple of aspects of this issue. But first, anything that popped out of the conference?
I think that this is shaping or reshaping the fabric of every industry, but I think especially financial services. One of the things that I think we are not having enough conversations about yet is AI in the hands of our customers. Right now, so much of the focus on the community bank side is around like, well, what are we going to deploy for our operations? And I think there's a sense of like, we can set the pace. We can set the pace for ourselves. And I think that I don't even know how many, I can't even measure time in like months or years. It's like, we're probably days or weeks away from your customers having their own agents provided by somebody else who's going to come knocking on the door to be able to start facilitating that relationship. And I think that's part of the conversation that was happening at FinTech Meetup this week that I'm like, oh yes, this needs, we don't have the privilege of waiting until it's like, we would like to wait until we get everything situated internally before we deal with that. But we're gonna have to parallel track a lot of these things. This is the movie poster for Everything Everywhere All at Once. And that is just the nature of what AI has done to every industry. But to be able to track with, you need to be having the conversation around governance and risk while starting your pilots internally and considering how you're going to transform your workforce and meet your customers where they're at. Is like there is no sequencing. And so that was probably maybe I was feeling a little empathetic for the community bank leader who's maybe walking away feeling this is overwhelming. And it is. I will not diminish that. It is absolutely overwhelming. But that is what it is to lead a bank in 2026.
Sure, and thanks for bringing that up because that was one of the aha moments for me is when I started listening to conversations around agentic AI in the hands of our customers. Number one, it's outside the walls of the bank, and we cannot control the velocity of their uptake and their adoption of these tools and how they present themselves to us. But then we have to react as banks. So, who's developing the Know Your Agent program,
Yeah.
and what does that look like, and How do you sign those agreements? How do you fashion and sign those agreements that allow a bank to retain rights as money is moving on behalf of the agents, on behalf of the customers? So it's fascinating and it's frightful at the same time. It just is. A couple of questions for you, as an observer. Have you seen the promise of the return on investment yet, or are you seeing pockets? Are you hearing success stories, I guess, with the
Hmm.
investment?
Oh, yes, I have some stories. I would say don't expect an ROI at the beginning of your maturity curve. The ROI is not captured economically, it is captured in learning. And you can say that about probably every innovation curve, especially AI, when phase one is let's turn on a co-pilot for our employees and help them, rewrite their emails. And there's a lot of just learning going on with this new engagement of how does work get done. That is not where the ROI is going to really come, but you can't skip that phase of learning through doing. So don't let the lack of ROI in the productivity phase keep you from jumping in the pool. You got to get through it. I would say in terms of where we're starting to actually see some ROI, there is some low hanging fruit. We've had some banks that have rationalized their portfolio of SaaS products and said, what doesn't have a lot of front end and has a low risk profile that we could probably build ourselves at this point because that bar has been lowered so significantly on how we build and own these models ourselves. So we had one bank that eliminated, it was like a $300,000 contract for a small dollar loan product that was like, oh, you overdraft, we're going to decision on, whether or not to approve this or not. And they were able to pull that in house and build that and eliminate that recurring subscription. So there was some ROI in that. I would say this is a note. I don't know if you have any fintech listeners, but if you do, this is a note for fintechs pitching banks. If you're pitching a community bank, the only pitch cannot be this will lower your headcount. We've like your deposit ops department might be Jim and Carol. It's like we need both of them. And so and it's not that big of an ROI. Even if we got rid of both of Jim and Carol, like that's still not enough of a return. There needs to be a growth proposition in order to justify the investment. And so that it does bring us full circle back to like business strategy of a I don't love the idea of like, oh, what's your AI strategy? It's like that's the wrong question. The right question is, what's your business strategy? Where are you trying to play? How are you trying to win? How then does AI get tucked into that strategy to enable you to do that better and faster than your competitors? So I do think that these AI deployments it should track with your business strategy in order to start seeing that ROI. So yeah, I'll stop there. I'll let you ask another question because otherwise I will keep rambling.
No, that's fair. And then you still have to discount the ROI because Jim and Carol aren't pulling their deposits out of your account, out of your bank. So there you go. The other question is just, it's near and dear to my heart when we start talking about artificial intelligence and productivity tools in general is what is the human impact of all this, right? Where's the human in this? And for other technologies, they seem to be enablers. But AI feels different because it not only enables, but it can displace. And so we've heard conversations in other industries, particularly the information technology area, where maybe frontline beginning coding is going to be a thing of the past. Do you see that same trend potentially occurring in banking? And if so, what do you think that portends for the future of financial services?
Hmm. I think work is going to change for everybody. I have confidence that there is still good work to be done for humans in banks. Um, I read a great article, actually shared by another one of our members, but it was published by Foundation Capital. and they outlined 4 new buckets of work that humans are going to fill. And it was basically, these are categories, not the actual titles, but chief accountability officers, system architects, relationship managers, and validators. And it was the most helpful model that I had seen of casting a vision for this joint human and AI workforce. And so that's a good read. I can send you the link so we can share it. That I thought was interesting because of the vision for the primacy of like, where does human skill remain essential in these future workforces? Um, in terms of, I think the big question a lot of bankers are having, and it goes back to the example I shared at the beginning around I want my credit analyst to spread this manually because they're going to learn. They're going to learn by doing this. So what do we do when so many of those entry level jobs do become automated? And I think this is a really important question, and it doesn't have a super easy answer. One of the things I'm interested in is this idea of simulations of, okay, could we fast track? Because there's a difference between, sitting at a desk and taking a test and learning intellectually versus the like, oh, this is your first deal, young lender. You are going to have to make decisions and put the bank at risk with these decisions of whether to lend and on what terms. And it's very different when you've got skin in the game. And so to the degree that lending is an art form that must be learned through experiment or through experience, how do you replicate that experience for young lenders? And I think that there's some promise in like more of these like, okay, can we simulate that? I don't know. I'm interested to figure out that piece of it.
Yeah, and I think too the other notion that rumbles around in my brain is the notion of relationship and trust as
Yeah.
it pertains to banking. And while these specialized financial service providers can be very useful for folks who are very comfortable with their relationship with their money, I think for the vast majority of folks who aren't as comfortable, aren't as knowledgeable, don't feel as confident around the money making decisions, relationship has traditionally been so important. And that's where they go to their financial institution. So I look at that and I say, man, how will artificial, because for Sunrise, as an example, as a banking as a service bank on our side of the bank, we knowledgeably outsource that relationship, if you will, to a third party financial technology firm. And that's fine because they are reaching targeted segments of customers that we would love to service. We just can't do so profitably,
Mhm.
right, at scale. But at the same time, we understand that's the trade-off. So when I think about artificial intelligence and the notion of relationship and trust, I don't know if you have any comments on that too.
Yeah. On the one hand, I agree with you that humans trust humans. I don't think that there's going to be this like absolute like, oh, I speed is everything, programmability, like I'm going to choose all of these values over trust and relationship. Like I think Silicon Valley would like us to believe that is the case, but I don't think we see it happening in reality. The counterpoint to that is, have you been paying attention to how much therapy is being done by ChatGPT? It is one of the top use cases. And so there is something about these machines that are able to emulate humans in a way to show empathy, even if it's just because it's in their training data, but that it creates a safe space for people to share and ask questions and be vulnerable in ways that either they didn't have access to, because therapy, I think, is difficult to get access to in some communities and under some insurance providers. So, in some ways, I'm like, this is filling a gap. Is it taking away from, are people choosing this over a traditional therapy? I don't know. I actually don't have the answer to that. So, it's a gray area for me, Eric, to be honest.
Yeah, no, it's and it's the mess, and I love in the mess. And I think this is something that I'd love to have a continuing conversation with you on. Yeah,
Yeah,
this would be great
absolutely.
because we'll learn more as we go.
I think so many community banks are like, oh, AI, like we're gonna use it just internally. We're gonna make everything super efficient, and but we're not gonna lower our headcount. We're just gonna send them all into the field, and they're gonna build relationships. And because there is this inherent, like, we're community banks, and that's like what our customers want. And I think it all comes back down to the, who are you trying to serve? What value are your customers looking for as you think about reskilling, upskilling, redeploying your workforce in these ways of like being not being nostalgic for community banking in an unstrategic way that says relationships first. Every ounce of productivity we squeeze with AI is going to go into relationship building. And we get so many more phone calls from relationship managers asking how your new puppy is. It's like, I don't know that this is the best use of this. I do think more focused customer support can be great, but it might be in product. It might be in these other areas. And so that would maybe be my challenge to community bankers of like, be thoughtful when you think about redeploying your talent into customer centric roles that might not be frontline support. It might be these other customer supportive roles that are potentially more scalable, more strategic.
Well, if you're a community bank listening right now, that's some things that you can start doing differently tomorrow to truly make a difference. There was a lot of ground that was covered there, a lot of great insight. When we're starting to talk about some of these trends, and we know that AI is a big part of that, blockchain, some of the even open banking is that does or doesn't kind of ebb and flow, wax or wane, but it's an inevitability in so many words, I think, as I think forward, at least to me, I feel that it is. What is a trend, fintech related or otherwise, that you think is just simply overhyped?
Oh,
Yeah, different.
I right now, I do think that stablecoins, I would still put in that category as a technology looking for a use case. I am willing to be proved wrong on this front. But I think for most community banks, the use cases that are great for stablecoins, like it just doesn't overlap with their ICP. So I would put that one in that camp. Are there others? I mean, I am pretty all in on AI, so like there are very few AI use cases that I would say are like so overblown. I'm like, I just eat it up. I'm so interested in this whole category. So I was like, I will probably be the one on LinkedIn that your next guest will be like, I saw what Madeline posted about AI and is like so overhyped. Like, so I will put myself of like absolutely going to be putting my chips in that camp and letting others put their chips in, the digital assets camp. And, we probably just, we'll meet in the middle somewhere. Time will tell, who's making the right bets. But that'll be my fast answer for you on that one.
Madeline, it's been great. Really appreciate you sharing your thoughts with us today. A question: when you're outside of work, what drives you?
Eric,
Passion,
I have like
passions?
100 hobbies.
Yeah,
I
let's hear it.
collect them. I collect them like stamps. This year I took up pottery and scuba diving. So those were the new additions. The favorites, longtime favorites, big gardener. I love to garden. I love to bike. I love to boat. We're here in the land of 10,000 lakes. I am leaning in as best as I can. Um, so yes, I'm a hobby collector. So if anybody's got any new hobbies to recommend to me, I am all ears. I love trying new hobbies.
Well, Madeline, thank you so very much for joining us today on Social Currency.
Oh, it was a pleasure. Thank you so much for having me.
And that engaging dialogue was powered by Sunrise Banks, member FDIC, equal housing lender.
Thanks for listening to the Social Currency Podcast by Sunrise Banks.
If you've enjoyed this episode and you'd like to help support the podcast, click like and subscribe anywhere you get your podcast content.
We'll see you soon.